TGIF. How's everyone doing? Thought I'd start off looking at weeklies. Hi, Brock, Mark, Kevin. Hello, everyone. Joswanth. Okay, so looking at Dixie on a weekly basis. Almost a reversal week. So when I look at the internals of it, we have a nice little reversal week working in pound. Of course, cable was weaker. But then when I look at euro, just like I showed you on the daily that made, or it was a 4-hour chart that made the pound the preferred short. Hi, Pete. You had a good year this week. Congratulations. But when I look at the euro, you have still have an up week. Stalled where it had to, but when I look at this, to me it looks like if we hold here, we can make another attempt for one more new high up here. Everyone see the 2, 1, 2? Pretty classic, confirmed high. RSI just a shade over 70. So next week, at new highs, and if the RSI stays under 70, I'll be probing a short in euro. Everyone see that, understand? Okay. Whereas I don't think the cable will make a new high. So that's something else. So euro makes a new high and maybe cable gets back to 720 or so. It would still be the preferred short. 1470, thank you, Midas. So that would be a new high, 1470. Let's just take a look here. I don't know if the wedge line is going to come in lower than that. You know, you could have throwovers. So something like that. So the line's going to come in around 1440. So a little lower than your supply area. Yeah. Okay. So I'll be watching that for next week. S&Ps. I think that even though we're up sharply, check it out. Well, first, here's your daily. This is the megaphone line right here. And look at what happened back in March once we got back inside this formation. So here's the weekly. You can tell that this week's low and last week's low right here on this 50-week moving average at 08. Hi, Monica. Under this week's lows, I don't know why we can't move to the next moving average, which will come in a little bit under 2,700. And for this kind of rally, I didn't do the fibs, but you know, if you're not a super bear looking at, you know, a new low at 1,800, and the guy from Guggenheim is still looking for that. I saw him on CNBC. I forget, Menard is his last name, Scott Menard. And he's not a dumb guy, all right, pretty smart guy. And he does a lot in debt, in bonds, and he was talking about that possibility still being there. I'll take it a step at a time. If we just subtract this week's range, 29, it's 140, going to give you about 28 and a half in here. Just taking this week's range and then subtracting it from the low is going to take you down here. Gold, good week. You guys know you know, I'm not long, but I gave up on the bearish play. You know, he had a couple of even in a bull market, it shows that you can, you know, you can make money even in a bull market. So you know, we had this break, then we had a failing rally, and once it started trading over the 1710 level, the picture changed. Looks like we're headed for new highs. I have some targets up around here. Where are they? Oh, they're not shown anymore. But up around 1800. I think what's interesting, and I will attempt this if it happens. See how the gold silver ratio, gold is way outperforming? Well, here it is. And it's just starting, you know, hasn't even really corrected. Oh, I don't have it up here yet. All right. We have any big releases today? Blake, let me know if you want to just jump on.
No, talk away, man. It's Friday. You take it. I'm here. I'm listening to you.
All right.
I was
Oh, now
actually
I'm
I was doing a little bit of just a little bit of research on this JP Morgan piece, but go ahead. Just continue
all
on.
right.
I'm
Okay,
here
buddy.
when you need me.
All right, buddy. Isn't Blake who could ask for someone better to come in and back them up? Okay, so here's your weekly. See how it's starting to turn up? It's actually a 2-week reversal. So this is saying gold's your preferred long. Hi, Vinny. How are you? Interview doesn't start for an hour. Okay, we do analysis for the first hour. Okay. So this is saying gold your preferred long, silver your preferred short. So with that happening, if there's an opportunity next week, and we're pretty far away, actually didn't have such a great week, but you know, still hasn't done anything really wrong. It's holding the 78.6 back fib. But if we get one more charge up here to new highs, this will look like a 3 drive to me up here at new highs. We'll see if that happens. Yeah, a lot of people I think are stuck. Yeah, that could be Pete. Oil, he had a pretty negative week with the S&Ps. See this? Can it generate another high? Yeah, if it gets to 37.50, maybe we get one more high. This tells me it's possible that highs were confirmed on the 4-hour. They were confirmed in the S&Ps too. So, you know, it doesn't always work, these confirmed highs and lows. I mean, this would say there's another high coming. Anyway, that's pretty much what I wanted to talk about today. Of course, rates softened, but they're not at new lows. And considering what happened in the market this week, TLT is still had a great week. Still quite a ways from the blow off top up here, but you can't fight this momentum. Maybe we're at least going to 170. And how about a round of applause for birthday boy Steve Volge? Steve and I have been pounding the table on VIX down here in the 24 area. Never closed under 24. Was here. So for the last couple of weeks, we've been talking about accumulation. I like call options when you're trading the VIX because most of the other products also have decay in them. Some of the VIX products, TVIX, VIXI, all of them. But this looks pretty good. You know, I don't think this is the end of it, just, you know, one big day. I think we came up with 50, 47, or 50 for being 38% back of this decline. So that still looks possible. And before I do turn it over to Blake, everyone with me, Steve works really hard, does one of the best reviews of the board every day for everyone. He's 40 years old, not 40. He acts 4 sometimes, but that's good. We all have the kid in us still. So happy birthday, Steve. Happy birthday to you. Happy birthday to you. Happy birthday, Nostra Vulgi. Happy birthday to you.
Woo! Happy birthday.
And the
Thank you, thank
S&Ps
you.
came off for your birthday. Even Mr. Market, he gave you a birthday gift. So
Yeah, to be honest, it was
I hope it's
quite
one
nice.
of your best years ever in all ways, Steve.
Thank you, Dale.
I
Thank
really
you.
enjoy working with you, and it's even
It's
better
mutual.
that we're friends. So hope it's a great year for you. Okay,
Thank you.
Blake, top that.
And I can't. Happy birthday, Steve.
Thank you, guys.
Yeah, this is Black Balloon year, isn't it? And this is the year that you get all these black balloons. Oh no, that's when Stelios turns 50. I'm sorry. That's
Oh,
Nice. Yeah.
that was a hit under the belt.
don't worry.
I was.
I'm just a year behind you, Stelios. So
I can't remember 50 anymore.
wow.
Yeah.
Anyway, hey
All right,
everybody. Today is Steve's birthday. Happy birthday, Steve. We're glad to have you part of our organization, and I know everybody that's listening in right now would agree that it's hope you have a happy birthday and many more to come. So,
and you're being cut out of the partnership.
And yes, and we're gonna drop you here. So anyway, for your birthday celebration, let's hope the S&P is down another 4% today, so we get some volatility.
So you could break even.
So yeah, there you go. Actually, it's interesting. I was just there's a tweet that I retweeted of one of the guys that I work with. It says yesterday, and this is from JP Morgan, and like I can read up on JP Morgan stuff here, or Citi's, some of Citi's research here. There's just some of the stuff that I'll read it in the mornings. Anyway, they had put a stat out. Yesterday was the fourth time this year that the S&P fell 5% or more. In the other three cases, the S&P was higher, retracing on average 71% of its previous day's losses, and then going lower in the trading session. If that pattern holds, that would imply approximate 4% up move today, and that is regarding JP Morgan. So what basically we're talking about is this huge, the huge sell-off that you see in the S&P when you get, and this is typical of a bear trend, you get a really big move lower, and then you get, these spike ups, reversals, big move lower, spike up reversals. It's just, it's pretty common when you're in a, you get these bear market rallies. So the pattern would be, well, we would get a move back up today, maybe to 3150, and then reverse, could then come down. So something that would look like, we'd come all the way back up here before, coming down again. Typically speaking, I would say, yeah, I think that's entirely possible if we were already in a downtrend. But what we've seen over the course of the last 2 months is we've made a steady uptrend over the last couple of months. So I don't think that today is going to qualify for that. Okay. I don't. I think today this is what we're doing right now is we're probably going to fail at around current levels, because this is actually an ascending wedge that we broke down out of, and we're, bear flagging it now. So I actually believe that this is what's happening here.
3,100 is a pretty big area. It's going to have to deal with too, don't you think?
Yeah, and we might make it all the way up to 3,100. I'm not going to dismiss that. And I agree with you, Dale. And it's not, we may not get all the way up there, but I think this is what we're dealing with.
Yeah.
Right. So, can we make it all the way up to 3,100? Possible. But what I do think is we're bear flagging it. So I think that any move up to 3,100 is a sell. Now, one of the other okay, so if you guys are ForexAnalytix subscribers, you know that you know I'm targeting the Aussie right now. The Aussie additions at 69 cents look pretty good, and if you guys don't know why, you know, those of us in the ForexAnalytix community are shorting the Aussie dollar, well, it's a false breakout, double top, false breakout above the highs. Extension of that takes us down to 67.50. This is a retest of the 69 cent level. If you read the analysis from the Aussie from overnight,
Good stuff.
End of day analysis, we closed below the neckline today, so rallies back to the 69 cent level should find sellers now and move below the long-term uptrend line at 68.15 would be a bearish event. And then last night, what we did is we came down to 68 cents, basically 68 cents. So we tested the trend line, bounced back up, fail at 69 cents, and now we're rolling over. Now, I do believe the next time around, back below 68 cents is not going to be so lucky. So in other words, if we break 68 cents, we're going to probably, you know, 67, maybe 66.50, back to this, maybe even a little lower that, but it's going to be near the 200-day moving average. Also, so as soon as I got up this morning, this is so ridiculous. As soon as I got up this morning, I had an order at, you know, the Euro Aussie at 63.90. We went as low as 63 overnight. We went as low as 63.90 and like half a pip, so it missed it. Then it was bouncing, and I was like, "Oh man, I missed it." But then we dropped back below it, and we got a second opportunity of for those of you that missed it, and it's already bounced 60 pips since then. So hopefully, some of you guys took advantage of that. And again, if you guys use ForexAnalytix, the update for the Euro Aussie an hour ago. Okay, if you guys miss it, the Euro Aussie has rejected channel resistance and slipped back below the 64 cent level, and 63.70 should be key support on this dip. You know, yes, we only went to 63.82 before bouncing, but you know, thing about the markets is you know, it's not a precise you know, it's not precise to the pip. You've got to kind of use the numbers around, you know, the key areas, knowing what you're doing. And the reason why we were looking at that area is this is previous resistance should act as current support. This is was our chart of the day yesterday, which is the you know, the Euro Aussie. And I believe that if the Euro Aussie breaks above 166, we are going much higher. So and that is obviously the 200-day moving average, channel resistance, and you know, we go above that. We're going to trade back up into the 170, maybe even 180s, depending on, you know, how much risk aversion that we get. So anyway, that's just something that I'm paying pretty close attention to regarding currencies. The euro dollar, it's been pretty stout. I mean, the euro dollars held up pretty well. I still think that the euro dollar can pull back as long as we stay below 114. But I think the euro is going to be a buy on dip type of currency. You just gotta, you know, wait for the, you know, proper dip. I think a dip down to 111.50 is going to be a great opportunity to be on the long side personally. But you know, just being patient for that, you know, it's obviously a little bit more difficult to do. If you guys are trading the US dollar Mexican peso, I know Ethan in the chat room, he'd picked up, we were talking about this yesterday, he picked up along with other traders too, picked up the US dollar Mexican peso below 22. And when it got up to 22.80, we were having this discussion yesterday in the chat room, and he's like, I don't know what to do here. It's, you know, sitting on a lot of profits because it was rallying right into the 22.80 level. And I'm like, that was the breakdown point. And he ended up taking, you know, half profits up there, which is good. And I think that was a smart decision. And now we've pulled back to the 22, you know, 40 level. I do believe the 22.38, which is the 38% retracement, is going to give you an opportunity to be on the long side. Like I said, I don't think stocks are actually going to be up 4% today. matter of fact, we might have seen the highs of the day are pretty darn close. We might actually hit one more brief high, I would guess. But if that's the case, the US dollar Mexican peso is probably a pickup down here for an eventual break back above, 2280. And last I remember, Citigroup was short. Yeah, Cititech was short the US dollar Mexican peso at 22.29. So I think the market's going to try to shove it to them because they always do anyway. Oh, did I say that out loud?
That's what
I
they do
did.
best.
I'm sorry.
That's what they do best.
Yeah, they tend to be a little late to the party, but hey, look, I have to give it to them. They've been right for a week, so I don't know if they've covered up their position. I was going to go back this morning and see if they've done any update on that, but I haven't had a chance because I've been busy just looking at other stuff. So, Steve, it is your 40th birthday. What are you going to do
Indeed.
today?
Cry.
Come on.
I'm kidding. I couldn't care less. If it's 40
yeah,
39 or 41.
You're aging
just
gracefully. You guys have any big celebration plans over the weekend?
Nah, things are still, quite, calm with coronavirus. Things are just opening up. So, family, close friends, perhaps, go out for something, dinner or whatever. Little guy's still recuperating from surgery as well. So yeah, taking it easy.
Oh, good. Well,
and for anybody who's confused, little guy is his son. Okay, he doesn't refer to something else.
Little guy is his son. Yeah, let's make sure it's not talking about the other little guy. You know what I'm saying?
I wouldn't have referred to you as little guy, but okay.
So,
you started that way. You opened the door.
So anyway, so what do you guys think about? You guys probably heard me talking about the S&P and it being, that JP Morgan's like, well, we'll be up 4% by the end of the day, or at some point today, just based on historical patterns of how we've sold off in the S&P previously. When we're down over 5%, we rally back and take back 70% of that or whatever on average. I believe it's different when you're in a utter free fall versus where we just came out of a 2-month substantial bounce. I think the momentum shift is momentum is shifting lower now. And it's not like we're in an utter free fall like we were, a couple months back. So what do you guys think about that?
Listen, under normal circumstances and just by looking at the charts, I agree 100% with you. I mean, it's quite clearly a corrective rebound. I expect more weakness. I'm not going to lie to you. The fact that we're talking about, a purposely created bubble that is being supported in any way possible, always gets you somewhat worried when you are, short. That is also one of the reasons, which I'm pretty sure there is a very decent chance I'm going to regret. I had built more of a position than I initially planned in being short the indices. And yesterday, near the lows, I was actually break even in my S&P position and a little bit in the money in the Nasdaq. So I found the opportunity to reduce my exposure. So now I have, instead of having almost, double a regular position between the two of them, I now have between the two of them, a full normal position. So I offloaded some. And the only reason I did that, as I said, is because, this is such an irrational market that, you can't really rule out anything, right?
Yeah. So, the good news is if we are up, 4% today, you can lay into some of that strength then.
Oh,
right?
Yeah, absolutely. Yeah. I will. But I still have between the two of them a full position. And I still think, as you said, that at the very least, we should see a few more days of weakness. At the very least.
Yeah. Well, good. Well, Stelios, how do you feel?
Well, my view, I've been saying that there will be some kind of catalyst for a leg lower. I think the leg lower started there is clearly a small correction today, but I think it's a correction. And the catalyst seems to be the fact that there are signs, growing signs, that there's going to be a second wave. So I still think we're going low. Remember, for people who have been following on the chat room, I had a quarter of position short S&P at 30.50 and another quarter at 31.15. So it's a small position for me at the moment, but you know, if we go a little bit higher, I'm going to add a little bit more. It's in the money now, but only slightly. But yeah, I think we can get, you know, towards the 2,700. I think we can get there relatively easily. I know it sounds controversial, but I think we probably will get there in the near term, and then we'll see. But yeah, I think this leg is started, and it's gonna. This is not the end of it. That's my view.
Yeah. Okay. Well, we're in agreement, which is always scary. So there you go.
Yeah, indeed.
All right. Well, one of the things that's that I think also we need to pay attention to, and I'll pass it over to you guys as soon as I say this. We got to watch gold. I mean, you know, gold surprisingly is still very well bid, and we're only, you know, very, very little off the highs. And if you think about it and you look at the daily charts, the thing about gold is it has completely worked off its overbought conditions on the daily chart, and we are still at trend highs. So that, to me, if I was short gold, and there's no way on God's green earth right now, and I'm not a gold, what do they call them?
Gold bugs.
Yeah, I'm not a gold bug at all. Although I own some, you know, physical gold that I bought, you know, 2 years ago. I bought a pretty big chunk of it, and I've been sitting on it because I've been worried about, you know, things in general. And I bought a lot of gold and silver. You guys probably remember that from a couple years back. I you know, but I'm not like long gold as a trade right now, like, you know, like a futures contract. But if I was short gold right now, I'd be crapping my pants if I was actually short gold right now. I mean,
Greg has got like a $40 lead from his entry on the 6th. So he's long.
he's bullish, and he's looking for
1,800.
And yeah. I cannot disagree with that call at this point. Yeah. And I look at gold, and it, you know, let me just refresh this chart here. There's your weekly chart, and we're hanging at the top of the range as relative strength is completely worked off overbought signals. It is aching to move higher again, and I'm not saying that it will today. Today may or may not be the day, but I think, you know, a break above this resistance, and we are going to squeeze the crap out of the market. And silver looks pretty bullish too. So I think we need to keep an eye on these precious metals once again.
I agree, and you know that.
Fundamentally speaking, there is really no scenario for gold to go lower in the long term, because of course nothing moves in a straight line. But fundamentally speaking, just looking at what is happening with fiat currencies, I mean, you know, there is no justification in thinking that anything that has intrinsic value is going to depreciate in a long-term horizon.
Yeah. Yeah. So I you know, here's the thing. You know, like I said, I'm not trading gold, but I wouldn't want to be short gold. You know, that is the last thing I want to be doing right now. You know, when the market is applying this much liquidity, or when central banks are, you know, and there's a limited quantity of something, whether it's gold, and I mean, you know, probably the same could be said for Bitcoin, although I'm not a big Bitcoin supporter. You know, look,
Bitcoin and gold held up great on the route yesterday, unlike what happened in March.
The whole equity market correction, the whole rally, the 40+% rally from the lows, gold didn't budge. And if we give back this 20 or 30%, you know, 20-30% of this rally, that where's my S&Ps?
Yeah, I like Greg's target.
Yeah, I mean, if we do this in the S&P, and we go back to 2,700, which I think is pretty reasonable. If you guys remember my analysis for the last, you know, couple months, we kind of overshot more than I thought we were going to go. But I do think that this summer we're going to be trading around these levels, you know, consolidating, waiting figure out what's going to happen this fall.
Yeah,
But
they're
if we-
gonna the election. They're gonna start paying more attention to that.
And
Yeah, and,
even
you know,
even at those levels, valuations are still going to be excessive.
well, yeah. I mean, if you look at the S&P, I mean, the
PE?
earnings per share estimate
Yeah.
at like 2,900, I think is still, I think it's
35.
still, no, it's like 18 or something like that, if
Oh.
I'm not mistaken. But it's still pretty lofty, in my opinion. So, you know, for equities to correct down here to stay still fairly lofty, I think is realistic. But again, if stocks come down, what's gold going to do? I mean, I think gold sees 1,800 and above. Like I said, I sure as hell wouldn't want to be short right now. And I mean, yeah, we're at range highs, so it's from a trading perspective, it would be hard for me to buy gold. Like if I, you know, just because so this is not a conversation that is really going to help you if you're actively day trading right now. You know, I don't, you know, buying gold right now doesn't make a lot of sense to me. But what I'm saying is you got to, if you're short, you got to be careful, because this is one of those things that we can start squeezing. If you remember back in, let me think about the year, probably around 2007, 2008, just pre-financial crisis, pre-financial crisis, right before. Oh, no, I guess it was after. It must have been 2009, 2010. So I remember we would be sitting here. I would be sitting there in the evenings watching gold, and it would just rip like 30, 40, 50 bucks higher. And you know, I have to go back to 2009, 2010 area. Right around, this whole move here, I think we're at risk of another one of these type of blow off top type of moves in gold. I believe that we're probably somewhere around here or here, if I had to guess. Remember, this is post financial crisis. Think about this. Post financial crisis, what did the central banks do during the financial crisis, especially the Fed? What'd they do?
Liquidity.
Plowed a crap ton of liquidity in the market. And not only just the Fed, it was the ECB, Bank of England, blah, everybody's coming down to ZIRP eventually, which, you know, if you listen to me, you know, 5 years ago, I said, eventually everybody's going to be at ZIRP. Here we are, everybody's at ZIRP. So if everybody's at ZIRP, everybody's, you know, plowing more money into the market. We are probably, I would venture to guess, we're probably around here, and this is coming. So, and it's going to be one of those situations where we're just going to be sitting here, and it'll be like Asian trade, you know, and it'll be one day we'll be sitting here, just, you know, everybody's trying to get some sleep, or for us, we'd be making dinner, and then, you know, gold's going to jam up like 30, 40 bucks. And then the next day it's going to be up like another $60, and we're going to go, what the hell just happened to gold? I strongly believe that, because this is the after effect of what's happening right now, right? Oh, anyway, just some food for thought for those of you that are on the short side. And like I said, it's not probably something that's going to happen today. The chance of it happening today is probably pretty slim on a Friday. But I sure as hell, like I said, I sure as hell wouldn't want to be short. All right, I'm done. I'll pass it over to you guys.
Thank you,
Thank you,
Blake.
Blake.
Have a good
Hey.
weekend, Blake.
Happy birthday to you, Steve.
Thank
For
you.
all of you guys and gals out there, the 99.9% of you, thanks for listening in. We appreciate each and every one of you. And have a great weekend. And I'll see you on the week ahead video over the weekend.
Thank you, Blake.
Thanks,
Bye.
guys.
Talk to you later, mate.
Happy birthday, bro.
Hey, Stel.
And I just want to clarify, I'm going to be turning 49 this year, not 50. So don't make me
Ah.
older. Yeah.
But you're damn close. Let's
I
not
am damn
forget.
close, man. Yeah.
Sorry, I gotta go.
Yeah. So interesting reaction from yesterday. As I said before, I am a little bit short the S&P and waiting for lower prices to start going long. But I think we have a little bit of way to go first. What did we have today? We had some numbers. The main ones were out of the UK, where we had a month-on-month GDP of minus 20%.
Sounds healthy.
Yeah, well, expected at minus 19 or so, whatever. So it's in the ballpark. Manufacturing production, industrial production, all both minus 24%, something like that, month on month. This is for April, and the May numbers are probably going to be equally bad. And then from then onwards, we'll see what happens. You know, the main theme now globally is that economies are starting to open up. And unfortunately, it seems that there are signs of a second wave. Like I was reading about Houston today, where they are apparently getting ready to go back to stay-at-home orders and some kind of a lockdown. So, you know, this is not just one city in the world. I think, unfortunately, this might be coming back. And I hate to think what will happen.
Imagine
if
when the weather starts turning colder again.
Yeah, I don't want to think about that. So my opinion is, you know, the market has become a little bit too optimistic too quickly, and a lot of good things need to happen for us to remain where we are in terms of equities and markets in general. I was lucky enough during the past rally of equities to take profits on my short dollar Norway position and some of my euro Norway. I didn't close all of it, but you know, I'm going to be adding higher if we spike on an equity sell-off. So that's another thing I'm looking at. And I'm still long silver, obviously, and I'm kicking myself for not adding more on the March collapse. I mean, gold fell a little bit. Gold fell, what, $250? It went to what, $14.50 at the lows, but silver really crashed. And I was looking at it. I really wanted to get in some more, and I said in the end, you know, leave it, and I am kicking myself. But anyway,
you wouldn't have gotten it at that price still. I know guys, some guys I mentored were buying physical.
Yeah,
they were charging $4 over spot that day.
Yeah,
So
you're right.
you would have paid 15, 16 anyway.
Yeah, which is what, 10. That's a lot, right? That's
Yeah,
a lot.
that's
of
a big premium.
Yeah. Wow.
Yeah.
Yeah.
They've shrunk the premiums a bit. So
okay.
Yes.
Well, that shows you, right? When things get tough in spot, premiums are going to go higher because there's not enough to go around. There's not enough physical for people who want it, and that's the end of the story, you know. So anyway, what else did we have? Data-wise, very little. Some inflation data out of France and Spain, mostly in line. Nothing really to write home about. And really, what we're looking at is equities once again. And was this the just one drop, you know, flushing a lot of people out and then continuing higher, or do we go lower? I think the latter. But remains to be seen. One thing's for sure: there's a lot of Robinhood traders who are not happy with that move yesterday. And
amateur passionate involvement in any type of market always ends in the same way. Always.
You know what happened to the Robinhood traders yesterday? They got Friar tucked.
Friar tucked. That's good. Our friend Venkat is asking why.
You like that, Steve? That's your birthday joke, man.
That was good. We have excuse me. We have a friend who's asking why buy physical and not futures or anything like that. Well, for me, number one, I actually own both. I own both physical and I dabble on ETFs. But for me, number one is you want to own the actual thing, because otherwise it's just a claim to something which may or may not materialize.
Exactly.
And there are many ETFs which have this clause, which is called forced cash settlement. So they can force you to settle in cash.
Instead of delivering, if you want.
So if you wanna take a quick punt on something, you can use futures and ETFs and stuff. But if you want something like myself, I want something to keep for my kids. I will not buy a financial product. I will get the actual thing, or maybe a nice rare car or something.
People can't imagine that. There have been times in history where you've needed to have it in hand to barter to escape boundaries. It's very good bribes when paper is no good. So actually, diamonds
And more
very
times,
portable.
yeah, more
They
times than somebody can imagine, actually.
Yeah. So
I think it's unlikely we'll get to that point again where actually it could happen, but I think it's less likely than it was before.
Yeah, it is less likely, indeed.
But you're both right. You are right. Yeah.
Well, yeah, because the technology to control the population now has never been better in all of our scientific dictatorships that we live in.
Yep, they know everything
Just my
about
opinion.
us, right? They have
everything.
They track everything. They know everything. So
yeah,
there you go.
Yeah, I got a call from the NSA, and they sent me a text, asked me if I was constipated. All right. So anyway, they know everything.
Yeah.
All right, buddy.
Yeah.
Did they offer to help? Did they offer to help?
They said, Dale, eat more fiber. We're going to follow you to the store now.
Nice.
All right.
Anyway.
Okay, cool. So, back to the charts then.
Yes, sir.
Okay. So, I've been saying for quite some time that everything has become now one trade. So, the important catalyst for things to start moving again in a more logical manner was obviously, a situation of risk-off returning. We clearly saw that happen yesterday. Quite a massive candlestick, one of the 10 worst days in the markets in history. Actually, we've now registered 4 out of the 10 worst days in history within 2020. So keep that in mind. We clearly not only sliced through this ascending channel. Now, you want to look at it as an ascending channel. Blake wanted to look at it as an ascending wedge. The truth is that it doesn't really matter what it is, because in any case, however you want to see it, like this or like that, the trend line support is exactly the same. Okay, so for all intents and purposes, it's the same type of formation breakdown. If you remember, I also mentioned yesterday that I was also looking at this trend line support having to do with the RSI, which we also comfortably sliced through. And I was also looking at the NASDAQ, which my interpretation was that it had already overthrown an ascending wedge, but I didn't think that deemed the ascending wedge to be invalidated. As I mentioned a few days ago, I thought that the angle was too steep for this ascending wedge to be, an ascending triangle breaking to the upside and accelerating. I mean, that could have easily been the case if the angle was, shallower. Now, admittedly, we haven't seen a clean break through this ascending wedge in the NASDAQ, but I do think that it's very likely going to be happening today or Monday or whatever. So, I think that, in combination with the fact that we were trading at all-time highs in the NASDAQ, given what has happened during the year, and the fact that we were trading positively in the S&P for the year, despite the year having started with everything priced for perfection, and we got the, let's use a Greek word, the antithesis of what perfection is, and yet the S&P turned positive on the year. So combination of fundamentals and the technical rebound, which was overdone, I think comfortably points to lower prices. Now, as I've said, this market is definitely manipulated directly and indirectly in many different ways. So I do understand why somebody would be skeptical. I mean, I'm skeptical myself. That's why I reduced my position when I found the ability to do it at break even yesterday, because I had increased it to more than I was feeling really comfortable with. But I do think that, and it's time for us to jump on the 4-hour charts, because I do think that now that we've seen these reversals, it's a good idea if we have a look at the market, in lower time frames. So, for example, and then I'm going to jump to FX. Here is the S&P. So, as you see, the drawing is a little bit different because this is drawing on a shorter term chart. So, I was drawing like smaller formations that you don't really draw on the daily. So first indication there was the breakdown from this ascending channel. We found support in this horizontal support resistance area. If I zoom back, you can see that it was quite important. And now we're about to test the support resistance area as resistance, which is roughly here at the 3080-85 area. So I wouldn't be surprised to see this area rejecting and producing more downside. Alternatively, you might see something like this. But in any case, I think that the odds clearly favor, at the very least, another leg to the downside. Okay, now, having said that about stocks, and I'm going to stay on the 4-hour chart. Here is the cable. Cable got rejected from this confluence of resistances. Nice move lower. Look where we got rejected from. We found support in the support area, rebounded, and this 126.40 area multiple times acted as support resistance, twice as resistance at that double top over there, acted as resistance again. So against that area, I think that the cable will probably find more selling. Of course, as you understand, and I should probably have started FX from there, the DXY, as we had said in advance, once we saw risk off, the DXY bottomed. We actually broke through this descending channel. For the time being, we're finding resistance near the 97 area, which has acted as support resistance multiple times. Probably this is a corrective consolidation. I would expect at the very least another leg to the upside, as we expect at least another leg to the downside in risk assets. So implications for the euro have, I need to stress this out though. The euro is holding very, very nicely despite the rebound in the DXY. So that has to be said. Now, euro has broken down from this ascending channel, perhaps retesting it before producing another leg lower, which I think is probably going to prove to be quite a nice buying opportunity. Okay. Now, Aussie and the Aussie and the Kiwi clearly suffered more, given the correlation with risk. A little bit of a rebound. We're retesting this previous low as resistance. Same deal here. I would expect lower from roughly these levels. Okay. Now, one of the currency pairs that really benefited was the USD CAD. Quite a massive rebound. If you look at the daily chart, quite a massive rebound. I want to zoom out to show you though, because from a technical perspective, this is quite an interesting area. So let me move this a little bit. Okay. So you can still draw this pullback as a descending channel. Keep in mind that we found support at a key confluence of support areas. You can see it here. Very nice rebound, which for the time being has found resistance at another important support resistance area. You can see it's the area which gave us a high at the end of 2018 before getting a prolonged consolidation, which we exploded higher from. And at the same time, I also have this intermittent trend line support, which is now acting as resistance. Now, having said that, I think that we've probably found support here, and another push at the very least towards this confluence of resistances is very, very likely. So a move towards 138, an extension towards 138 is likely. And I think it's also likely that we're even going to slice through that and get USD CAD to rebound substantially higher. Those of you that are newer in the markets perhaps don't know that traditionally this correlation has weakened over time, admittedly. But USD CAD, keep in mind, was very, very well correlated to the VIX. So that was for many, many, many years a traditional correlation. Now it hasn't been that good in the recent past, but it's not that bad either. You can look at it here. Okay.
Yeah, risk off.
Yeah, exactly. Now, since you mentioned it before, Dale, I said yesterday, and let me return to that before we go back to FX. I said yesterday that for me, a daily close above the descending wedge would have been all the confirmation you needed. And I mean, we got a lot more than just a daily close above that. Just look at the candlestick we got from the VIX.
Brock was saying it was historical, some type of mega. What was that again, Brock, that you said about the VIX earlier? Some type of move. I forgot the terminology he used, but yesterday's candle is okay. Standard deviation, and
it was what? How many standard deviations above the mean, mate?
Yeah, Brock had the number. We have
about 4 standard deviations. So we okay.
Yeah, plus.
Okay.
So
yeah. 3 standard deviations is, for those that don't know, 1 standard deviation is like 67% or so. 2 standard deviations is like 95%. 3 standard deviations are like 99.5%. 4 standard deviations are like, you get it, like 99.90 something. So it was so in essence it was a move that happens once, every whatever. Obviously an explosive candlestick, and nothing is impossible in this hugely manipulated environment that we pretend that it's still a market. But from a technical perspective and from experience, it's not easy to get a move like this that just fades away and dies like nothing happened. So,
yesterday's high is not the high of the move. Probability-wise,
it's not. Probability-wise, it's not. Yes. Probability-wise, you would expect at least some continuation. Which, is also another indication of what we have been saying for quite some time. And we made it very, very clear. If you remember, we kept saying like for 2-3 weeks that, listen, there is no reversal signal from this market yet, but don't be fooled. Don't be pulled into this madness because of FOMO and because you see this market just, slowly crawl back its way on a daily basis, because from a risk reward perspective, this is a very foolish, thesis. And the proof that that was the case is not that we turned lower. It's, the extent at which yesterday's move turned lower. And this is what happens when a market is irrationally priced. Whenever you get some type of an event or some type of a trigger that might even be a tiny one that gets some jitters in market participants, you get massive moves to the downside. So I mean, yesterday so far might have been a single down day, but look at it like that. The person that bought at the end of May and held for all these days saw all these profits being, vaporized in half a day. And most likely, another leg lower, at the very least, will get people that bought a lot earlier than that, seeing their profits getting vaporized within, in total, it's going to prove to be like a week. Exactly in the same manner that it happened here. Now, I'm not arguing that this market is going to produce new lows. It should. I mean, if fundamentals mattered, if stock market was still even, moderately coupled with economic reality, there wouldn't be, a question about if the market would produce new lows, because we wouldn't have even seen such a rebound. But even being the case that we have this market that we have, I think that another leg lower at the very least is warranted, and we're going to get it. And as I've said some days ago, my first target, which I think we're going to slice through it, but my most conservative first target is 29.50. I think it's more likely that we're going to revisit 2800. So more realistic, in my mind, is a revisit of 2800, perhaps even lower, 2700.
2650, so they flush all the 2800 bulls out of the market.
I have no objection with any of that. Yeah.
Just a nose for Pinkert.
Baroque also says that we had record S&P negative breadth. I think the same applied to Nasdaq. And for those that don't know what the breadth of the market is it is in essence the ratio of the stocks that are moving higher to the stocks that are moving lower. So bottom line, since the markets, each of the markets are actually weighted in different. I mean, the DJI is weighted in different terms than the S&P, but I'm not going to get into details because it doesn't really matter. But bottom line, as you understand, stocks are not equally weighted in an index. Okay, and that is important for you to know. Which means some of them are based on capitalization. So, for example, Apple. A move from Apple is going to affect the S&P a lot more than a move from one of the smaller stocks. So you can actually get, as we've seen many times in the recent past, you can actually get the market moving higher with the vast majority of the stocks not participating in the rally and actually falling. So that's the market breadth. And
if the market had bad breath yesterday, Steve, why not just put a face mask on it? Huh?
So usually
a couple
when
of Tic Tacs or something.
So usually one signal that a rally is unhealthy and faltering is that you see less and less stocks participate at the last part of the rally. And that's another indication, along with momentum divergences, and some other stuff that give you a decent signal that I shouldn't be buying this market anymore. If you don't want to short it, at least they give you a signal that you shouldn't be on the long side anymore. Now, I think we've overanalyzed everything that has to do with stocks. I want to stay on the daily and some effects because I wanted to show. I said yesterday that the first area of support for the Aussie was this 68.20 area, not only because it's a horizontal support resistance area, but because it's also this ascending channel trendline support. I actually drew that several days ago, two possible paths. Keep in mind that, okay, this didn't happen. So the two possible paths from where we currently are these. And I think given the fact that I'm also expecting, more weakness in stocks, I think this is like a more likelier path. Also, let's have a brief look at the USD cut on the daily, which I talked to you about yesterday, just before. Just look at this massive white candle that we got. We got a hammer, which indicated the low, and then we get this massive candlestick, which very rarely a market will top with such a candlestick. which means that any pullback in the USD CAD, and we got one earlier today. I mean, at some point today, we were 40 pips lower than we currently are. And from the highs of the day, actually, that was at, we find at 136.65, the lows were 130 pips lower. That was actually a buying opportunity. I'm not saying that we can't go lower, but I think that from a risk reward perspective, and here's the USD CAD again, I think that from a risk reward perspective, at the very best case scenario, if you get lucky, buying 134.80 is an amazing risk reward opportunity. So if you get lucky enough to see another leg lower towards that area, I think you should buy it. We have an interview.
Yeah.
Oh, sorry,
Yeah,
it was
birthday
Friday,
boy.
so I thought we might not.
No, we have Vinny, the Emini.
Oh yeah, Vinny the Emini. Yeah, okay.
All right.
So Vinny might share the story of how he got banned from Twitter.
Yeah, I was going to ask him. Anyway, I don't want to waste the whole interview with it because.
Go ahead.
Okay. So anyway.
Have a lovely weekend.
Oh, hey, happy birthday, Steve. Enjoy your weekend, buddy. Nice
Thank you.
work again this week, like usual. Okay. Hi, Vinny. Hello, Vinny. How are you?
I am fairly good. Mic check. Can you guys hear me okay? My computer is currently crashing out, so give me one moment.
Sound good.
You
Loud
sound
and clear.
loud and clear, yes.
Oh, fantastic, fantastic. Well, happy Friday, and happy birthday to the birthday boy. Welcome to the 40
Thank you.
Club. I am also 40. I think it's a
don't
good
rub
year to
it
be
in.
40.
Why?
Well, Tom Dante turned 40.
Okay.
And let's see, so I turned 40, so hey, welcome
Yeah.
to the club. I think it's a good year.
Let me tell you what. I'd love to be 40 again. So
Oh,
don't
that's
rub it in. Anyway, Vinny.
Yeah,
Yes.
Great
trust
day.
me, Dale. We'd also love to be 30 again or 20 again.
Yeah. I don't know if I would do that again. I was lucky to survive those decades. Anyway, Vinny, nice to meet you. Thanks for coming here today.
Appreciate
And
that.
there's a green, if Steve stops sharing his
I'm
screen,
going to stop
there's a
sharing now,
green,
yes.
green Dropbox, share screen, where
All
you
right.
just click it and show your setup.
Okay, great. Yeah, give me just one moment. For some reason, my screens are all kind of crashing while you're passing it over to me. Hopefully this should
Okay.
work here in just a moment. I am clicking
Okay.
on the share screen button now, and it's asking me what screen I'm sharing. I want to share, let's see, I have way too many screens. One moment, please.
You have a spaceship.
Yeah,
Ground
it's
control
like that.
to Vinny
Give me-
the Mini.
Hold on, here we go. Hold on. Here, let me help.
Ground control.
Can you guys hear the music from my computer, or is it just my microphone?
No.
Oh,
music.
that's unfortunate. You can't hear anything then. You're not gonna hear
Yeah.
anything good. All right. Well, let me pause that.
If you
Okay, I
wanna,
need to get my screen.
if you wanna share your computer sound, you can also do that in the screen that you.
Oh, there it
that you
is.
go-
Yes, thank you. Share computer sound. Perfect. Okay,
Exactly.
Thank you.
Exactly.
Oh,
So
look
you
at
can do
that.
that as
Pro
well.
move. Pro move. And now I really want to make sure I hit the right screen. How about this one?
Yeah,
Share.
not the YouPorn screen, the other one.
Okay.
Oh, yes. We're gonna leave that
Okay.
one out.
Wow.
Can
Wow,
you see me
Vinny.
now?
Yeah, I do. You really are in a spaceship.
Okay. Well, I just want to make sure you guys can actually see the screen. Can you guys see me waving at you?
Yeah.
Oh, haha, then
Yeah,
success.
yeah,
We've made
so,
it, ladies and gentlemen, boys and girls. Hold on, let me test one more thing. Can you hear this? Yes?
Yeah. Can hear
Can you
it.
hear my sound? Oh,
Yeah.
that is amazing. Then I am going to be able to show you guys some really fun stuff today. Thank you for allowing me the opportunity to come out and hang here with you guys. I loved the analysis you guys did this morning. Beautiful stuff. I don't know how this guy goes with you guys, so I'm going to let you tell me how we start.
Well, let me
and then
how about
I would
this?
love to just tell you how we approach things.
Okay. How about this? Let's
All right.
have an interview, which
Okay,
includes
okay.
kind of a two-way conversation. So
That sounds fun. That sounds
all
fun.
right. So I want to start here, Vinny. I see where you're at now. You're at point B. I'm interested in how you got involved in the market, what you were doing prior to this, and a little bit about your journey. Tell us a little bit about how long you've been doing it and who you blame for getting you involved in having 50 screens in your,
Oh,
your
yes.
house.
Yes, that's good. That's good. Well, I'm a big tech background guy. I'm an actual coder. So that's kind of where I started everything, is being able to, code. That's my whole claim to fame. What we built out here, it really couldn't be possible if I didn't already have a coding background. I've been coding for a very, very long time. Started, real early. Parents kind of threw the computer at you and whatnot. So I've been a software architect, designer, coder, a lot of stuff around data, data science stuff. We've had lots of projects like that prior to the markets. Interestingly enough, I'm sitting there one day in a cubicle at one of the banks that I was working at, coding their stuff, and a guy named Tuan Nguyen came over, and he's talking to me about his huge win he made in the market the other day. I'm like, what? What's that? I dabbled with it a little bit in college and was like, oh, okay, hitting the markets, huh? Awesome. So he starts talking to me about how he's trading with TD Ameritrade, or no, he was E-Trade back then. It was E-Trade, and he tells me about hitting the VDSI. I don't even know if they're still around anymore, but the stock symbol, I still remember VDSI because that was my first loss ever, was on a stock, VDSI. Are they still around? You guys stock guys? I'm not really a stock guy anymore.
I really don't know, Vinny.
No.
But they say it's actually good luck for your first trade to be a loser.
Is
And
it? Man.
Yeah, that's a superstition from Florida. Because my first trade was a winner, shorting gold at 200, and it went to 100. So,
oh, nice.
And I paid for it for 40 years now. So anyway, you started off the right way. So wow, coding, and so this guy told you about a big
so
win.
I'm in the middle of sitting there coding, and then Tuan's telling me that I need to learn how to get into earnings reports. He's like, oh man, you got to do earnings reports. I'm like, what's an earnings report? I didn't even know anything at that moment. So there's where it all started. Tuan Nguyen told me earnings reports. So we did this next analysis. We went out there, I'm all set up in this VDSI. Oh no, man, he's got good information on it. Look at the numbers that they're putting out. The CEO is going to talk about this and that. It's going to be huge, right? So I lose $8,000. I still remember on my very first trade ever, just getting wrecked on an earnings report. Had no idea what I was doing. So therein started my process of, okay, I want to learn. So I went out and learned Invest Tools, which was, you guys familiar with them or not? A lot of people have been through the program a long time ago. I don't even know if they're still around, but they were back when Thinkorswim used to be separate. Right. I know you guys have been around. You guys, know when Thinkorswim was not with TD Ameritrade. A lot of people I've talked to now these days, man, they don't even realize that was a separate group. With Tasty Trade and all the background, but we all know the history of the markets, which is beautiful. I love talking about the history of it. However, I got into the Invest Tools thing. They're talking about 13 points of fundamentals and whatnot. And then they taught you like 3 oscillators, which to this day, I still laugh about thinking about how terrible their trading strategies were when it came to technical implementations and entering and exiting. But got wrecked through that, spent a lot of money on them, and then traversed through several different programs like that until coming and deciding that I had lost enough money. I need to get serious. And I learned about prop firms. So prop firms were, I was 26 years old when I started. At 28, 2008, 2009, I went into a prop firm, VCM Capital Management, which is not even around anymore. But at that time, it was a great way to get great commissions and, all the things that go along with prop and all the people who were in it and stuff like that. So that's kind of my start into things. Of course, bringing my coding background, I kind of proved myself at Velez Capital Management, and a lot of guys started coming to me to ask me to code things for them. A few years later, I found out about NinjaTrader. I'm a big NinjaTrader guy. Are you guys familiar with that platform? Yes. I know some people are like, I don't know what that is, but
familiar with
NinjaTrader.
It was cutting edge.
It was, they came out with the first ATM, an ATM strategy where you don't have to enter in your stop, your target, and your entry. I mean, press a button to pop that out. That was their big claim to fame where they started. And then they opened up the .NET platform. And at that moment, I was hooked. I was in. I'm a big .NET programmer guy. So, it was like feast for me, and getting in there and being able to go, how am I going to approach the markets? And the way that we approach it now is a video game. I kind of grew up on video games, a big gamer, back in the day, and hand-eye coordination things. And right now the markets, I've watched, I always get it mixed up.
I'd like to challenge you to a Pac-Man game.
oh, Pac-Man, let's do this. My son, Mikey, he's 3. He's
That's
totally into Pac-Man.
That's as
He
far as
loves
my
it.
gaming went, man. Anyway,
Yes.
go ahead.
Well, he uses my pool table now for a Pac-Man workspace. He's like, Dada, you got Pac-Man? You be blue Pac-Man, I be red
Yeah.
Pac-Man, and we play
Yeah.
Pac-Man on the pool table. So I'm down with that. We could do this. Mikey actually might beat you though. He's terribly dangerous with this game. He can actually beat people at Battlefield 3. He's a Battlefield 3 player too. He's crazy. So yeah, that's my background on that. And here we are. We've coded AlgoBox. Are you guys familiar with AlgoBox?
No.
AlgoBox yet? Oh well. Today, ladies and gents, you're gonna know about the AlgoBox. Are you ready?
You're better than Kramer. Go
Are you
ahead,
sure?
buddy. Yeah, I
All
know.
right,
I
let's do
mean, the
this.
sound effects, everything.
Oh
Yeah.
yeah, why not? If you're not having fun doing it, ladies and gents, you're doing it wrong. It's never not fun to win. Speaking of win, we hit our biggest day of the year 2 days ago, $33,000 live. And by the way, we produce broker statements and show them, and we did a $20,000 day about 5 days prior to that. And let me show you kind of how we work. So that's
Okay.
okay. Are you guys good with that?
Yeah.
Let me turn this music down just a little bit. I have a feeling that that's probably slightly too loud. And of course, I can't find the volume control. There we go. All right, so this is kind of how this works. We got a lot of cool stuff. What would you guys think it would be cool to know what the sentiment of the market is according to Twitter?
Yeah, that'd be good information. Sure.
So, you can do a couple things with that depending on how you address the market. If you think that Twitter guys are smart, then, you might go, oh, okay, well, let's see. For gold, apparently right now, 63% of traders on Twitter right now are positive. What does that change about your gold analysis? I don't know. I tend to
Nothing
think
yet.
that-
I think they're right for a while.
Yeah, actually, I have
Can't
a
the
feeling.
little guy be right too, Vinny? I mean, we're always making, compared to institutions, you and I are little guys.
That's true. That's true.
Right?
I think
We're
too
retail.
Many people. Oh yeah, I
Go
think
ahead.
too many people play this whole game of like, oh, I'm pro and don't do retail. Dude, come on.
Yeah.
We're all retail. Okay, so we're all playing the video game. We're pressing the buttons, right? The only difference between a winning trader and a losing trader is who presses the button at a different time, right? And then if you
That's
can't admit that, that's where I think people have problems. Is like, this is a video game. So this is our approach to the markets. Are you guys familiar with Nav? Have you guys heard his story?
No,
Nav. Oh man, it's a good one. You got to check out. I know you guys who know who Tom Dancy.
you
is.
operate in a parallel universe, buddy. For mine, okay?
Okay.
But
Well,
I'm
Nav-
enjoying it. Go ahead.
Well, Nav is a really neat history. If you guys haven't seen it, there's a book called, I believe it's called Flash Crash. Have you guys heard about that book?
Yeah.
Okay, that Flash Crash book is about this guy Nav. And Nav,
Oh,
I
the
mean,
guy
he
was
made-
spoofing.
yes, the spoofer guy. So
Okay.
you know who
All
he
right.
is. Okay,
Yeah.
that guy.
Okay.
He approached the market as a video game. In fact, he actually said that when he was in court to the judge there. He said, look, Your Honor, I didn't mean to hurt anybody. I didn't even really think of it as money. I was just playing a video game. Now, to me, that is savant-ish. In fact, he's been referred to as a savant in that he just played the market like a video game and played it to the best of his ability. That's how we kind of approach the markets, but we also use massive amounts of analytics, such as things like this. This is really, something that a lot of our traders like to come in our room. You can type in !sentiment all in our room to get these, which another one is VIX. So do you guys follow the VIX much?
Yeah.
Okay. So
Caught
this is
it.
kind of,
Caught it yesterday.
yeah, I saw some of you guys were showing the correlation with what do you guys say was the strongest correlation? Was it the Aussie dollar?
Euro Aussie, Canadian, the Canadian dollar is also another one. USD
Okay.
CAD, risk off kind of plays in currency.
So we know it's extremely important to read the VIX. What we do is we plug a lot of this stuff into our system and we build an optimization plan for knowing what time frame is proper. In fact, I saw one of your guys today talking about shifting from the daily down to the 4 hour, right? Knowing when
Yeah.
that is appropriate, et cetera. We have a specific analytical process for doing that. So I'll give you an example. When the VIX is between 13 and 16, that's our sweet spot. We can basically run a whole lot of different things that we can't do it when it starts getting higher. So right now we've been really focusing on the S&P. We're leaving less of the NASDAQ and the Russell off our plates right now, basically because of where the VIX is.
Do you think we'll ever see 13 or 16 again in the near future? Aren't we in a different VIX regiment now, Vinny?
I do believe so. Yeah. So that could shift a whole lot of things. So back in 2018, you guys probably like me, we're day traders and that's our blood. Actually, I think you guys are a little bit longer term than I am. We're very short term traders. So intraday, 2018 just kind of sucked. I mean, we didn't hardly make anything except that, I was also running some crypto at the time. So that saved me from, basically kind of a rough year. But 2018, the VIX was so low. I mean, we touched single digits at the beginning of 2019. That was insane. But that year, 2018, was just like, oh my word, can we get anything more than, a 10-tick move, please? That would be nice, right? It was a struggle. But now is absolutely amazing. We have a thing in our room. It's called VIX up, ticks up. The higher the VIX, the more we're making, the more opportunities that we have. Let me show you guys some of those real quick to kind of get directly into some of our specifics on why our video game is so good. First of all, some things that we have that a lot of the places don't do. We actually provide a third-party verified track record of over 1 year. We are big futures traders. Are any of you guys in your kind of room there, are you guys futures traders or strictly Forex and stocks and options kind of thing?
Mainly FX, but we do things in precious metals, oil, stock indexes, across the board.
But any futures at all? Any futures? Yeah,
I mean, people could apply our, if we have a gold play, they could do it in futures, same thing.
Okay. Yeah. So we kind of take advantage of futures leverage and no PDT rules and all that other kind of stuff. So this is our actual third-party verified track record on Forex back in 2017, 2018. Not too bad. We ran a $50,000 account to $118,000 in a year. And of course, there's all of our risk evaluations. So our system works on, the reason I'm pointing this out is that our system works on Forex as well. Kind of like what you said, like your stuff can work on anything. But we did 129% that year. Not too bad for Forex. So
a chart is a chart is a chart. The only difference is the title and beta.
That's right. And then I'll add in, there are a lot of advantages. Is everybody here in the U.S. or you guys?
No,
you
global.
Guys outside the U.S.
Global.
Okay. So there's a lot of advantages on the E-minis, specifically on taxes. That's a huge thing for us here in the U.S. We get, let's see, where is our 21 E-mini advantages? So, this is a huge one right here. A lot of people don't know this about trading futures is that here in the US, it's, 60% of your income on that, even though I'm making money in minutes, I'm getting the long-term tax rate of 15 or 20%, depending on your tax bracket. So that's amazing. Basically, two guys make $100,000 in one guy's in stocks, one guy's in futures. The guy in futures, Uncle Sam hands him back a car at the end of the year. So kind of a big deal about trading futures. Now, but like you said, come back to the chart. So
that's a
let's
great
talk
point
about how we tackle the charts. Our guys actually post their P&Ls during the daytime, not just myself. We have members in our crew who are actually putting out their stats while they're trading. This is an example of one of our trades right here where he's got a trade open. This is one of our, this is normal members. It's not a moderator or anything like that. So we have turned the entire market into, well, the market's already a video game, but I would say that AlgoBox, what we did was turn on a cheat for it, where you can now select pinpoint entry locations like this. This is a headshot combination, which we'll show some more specific details about this. But the reason that we're able to get these pinpoint entry locations and literally trade from about, anywhere from 20 to 40 minutes tops. And our average trades right now are going somewhere between 2 minutes and 8 minutes. And we're using the leverage of, in case in this spot right here, he's at 6 cars, you hear 6 cars, 6 contracts, but this is only $3,000 of leverage that he's using to apply these. So we are able to, use that leverage to our advantage, small accounts, making literally income level P&L. So that's kind of how
do you have even smaller traders, Vinny, trading the micro, and is that a successful contract?
Yeah, in fact, we do. We have a lot of micros, folks. So we have a lot of details right here on our micros E-mini section for people who want to come in and see how that works. And we do. So, people who we actually start people in demo and sim, but then, some people are like, look, demo and sim, I just don't feel anything with it. So what we do is suggest to them, go ahead and do some micros on it. So we get a lot of guys who are doing the micros, and we have some people who, are doing micros full time where they can scale in larger on their positions.
Right.
And here's an example of one of our new folks who is crushing a trade off of a lower level Cypher Shark plus this cross. Now, this is our Flowmaster system, which is pretty powerful, where we can just literally pick a pinpoint entry location for our trades. And then when we're pushing up here into a red box, it's very clear where we're taking our
So you
targets as
coded
well.
all these harmonic patterns in your program.
Yes. Now, there are
Okay.
others out there who have those, but let me show you something that's neat about our system that nobody else does have. Is you're probably familiar with a PRZ. Do you guys know what a PRZ is in a standard harmonic?
Yeah.
That's the potential reversal zone.
Right.
But most systems will only show it to you once you have arrived at the PRZ. What we are showing here, you notice that if I zoom in a little bit farther, you can see this cipher for this corner piece.
Yeah.
And I am showing you where the PRZ will be for these multiple harmonic
Those are the
patterns.
circles?
Yes.
Okay.
Well, not circles. We've got squares here. You see those gold squares?
Oh, okay. Yeah.
So this is a red light, green light system with a get ready. Okay. So this means get ready. There is going to be a PRZ down here. So you can play this multiple ways. Up here, in this case, oftentimes we will get a trade right here. In fact, we do have one. That is a double dot, red dot trade set up right there. Plus, what we have is a double Flowmaster showing up here that we have a shift coming right here. So here's our entry. What's our target? We can now predict a target with a PRZ, which is a PPRZ, what I call a predicted potential reversal zone. So this is why our traders are able to also have such great targeting for their system as well. Very, very mechanical and literally playing the markets like a video game. And I encourage our students and the people who are in our crew to post screenshots. Obviously, you can see that in our crew here where they're just, relentlessly doing this. I actually have them use a specific type of mouse so that we can execute these very, very well. Now, this is one trade that I took this morning. Actually, I rang up Tom Dante and I said, bro, perfect trade setup coming in right here. This is called, let me pause it right here. So this is a GIF running right here. So this is well, you probably recognize one thing. You got an Elliott wave in here, right? So we got a simple Elliott wave, ABCD. Plus, when this is this color, we have additional points of confluence coming into this. It's a big deal for our dot system. We're pretty famous for our dots. We also get trolled for them pretty hard. But we put confluence behind these. Ours are called Fibella dots because we also must have at least 2 Fibonacci levels and the Elliott wave before I will ever even show you one of these in our code.
So at least 3 things of confluence?
Bingo. Well, that's only 3, but now let's count a couple more. On top of this, at this spot, we also had a multi PRZ. There are 2 green boxes right here. I should have colored that green. And then a nice little square there. So we got a PPRZ plus a green dot here. This is called an HMD. We call this a HMD. That's a Harmonic dot entry. And here is our target that showed up for a red dot up above. And this is a beautiful trade. Let me walk you through the whole thing as it plays out. This is what happened here this morning. Bing, 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 bang. Beautiful setup right there. So what you see is this ahead of time. And then we take off part targets. Now we add to position as it comes back into the box. We take some more off on the red dot. We've got our runners out here on our lines that we've drawn out previously. Bing, 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 all the way up into our final target. That was a beautiful multi-$1,000 trade right there on about, I think, total 12, and we moved to 16, probably total in that up, we added and came back several times. So probably about 22 to 24 contracts to run through that. And you catch a few of those in a day and you kind of make your pay. So that's kind of how our system works, video game style and clicking the buttons.
You ever, is it all short term, or could I ask a question like this? After yesterday's action in the S&Ps, do you believe we're going to correct the recent advance we had off the March 23rd low?
Yeah, let's talk about the current situation. So I actually called this ahead of time. Let me kind of show you guys how we do that. This a lot of people don't realize how much futures play into what happens in the markets, but this actually might help you guys in your current analysis. If you head on over to our YouTube channel page, you just type in AlgoBox or Vinny Emini, but some people misspell Vinny Emini, but here is how we put all this out. But if you look at our trading all-time highs video, I literally laid out for us what day this crash was going to occur and why. So something that people don't understand, I want to kind of draw this out for you guys. This is a good lesson that I think people need to understand, is the scenario of contract rollover. People do not understand enough about what happens when this occurs. What happened recently, we know that the market were they net long or were they net short recently?
Net long.
Yes, no trick questions about it. We know because the market is literally sitting at almost all-time highs, at least recent all-time highs, right? So we know that the market is net long. When contract rollover occurs, we are in what we call the buckets. We are in the 06 contract as of right now. In fact, it literally rolls over tonight to what? The 09 contract, right? So if everybody is net long over here in the 06 contract, this bucket is filled, okay, with a bunch of green longs.
Yeah.
They must roll over, even if they still want to be net long. How did they get to this 09 contract?
They put in a spread order.
Well, what is the technical, like very simple, what has to happen to all these buys? They bought all these.
They have to sell and then
they must sell. They must, right? They have to empty this bucket and sell because they are all net long. Now, you can't play this all the time like this, but when the market is like this, it's so easy to determine what is going to happen and when, because they even tell you the date when rollover happens, right? You know it's Wednesday plus FOMC. Smash it, right? We had our biggest day ever, $33,000 for the year in a single day off of 16 contracts. So think about that, $8,000 to hit that. Well, no, yesterday was just continuation. The first day that it moved down, I called that day Wednesday. The follow through was the day after on Thursday. Yes. So again, it doesn't necessarily have to happen all in one day. In fact, it can take multiple days because think of how many contracts we're talking about here. Massive, right? So there's usually a trick and pony show first to get people to they don't want everybody selling out their orders, which is why you heard everybody still thinking the market was long, which is why I told everybody it's going to be wrong. I told everybody they're going to completely get wrecked. We were 100% right. So they got to sell off here. And then, yes, we still may fill this back up if their sentiment remains the same, right? So we may see a violent move down and then a violent move back up. This is my only question. Okay, I don't know about this one. So you guys hypothesize on that one, whether or not I'm with you guys on some theories around, like, I personally do not think so. When I'll give you another, here's a Warren Buffett indicator. You guys know about the famous story about how Warren Buffett was getting into an elevator and somebody said, hey, Warren, I'm about to buy this stock. I heard you're in it, man. You know, I heard it's really doing well. And it's the elevator guy who's operating the elevator.
Oh,
telling him about this. Y'all know about the story? He gets off the elevator, immediately calls up his guys, like, dump everything on blah, 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 blah. He's like, because once Noob Street knows about some scenario, it's over. Okay. So
like Hertz tripling and that kind of action we saw last week.
Yes.
Bankrupt companies rallying 150%.
Yes. So check this out. My cousin, literally, I haven't talked to her in a while, whatnot. She knows what I do. So she hits me up on text and she's like, hey, I just got my stimulus check. I'm thinking about tossing it into the markets. I want to put 500 into something. What should I buy? And I'm like, dude, that's it. It's over. My cousin knows absolutely nothing. And she's asking me for a stock tip to buy along. Ladies and gents, we have Main Street wanting to get in on Wall Street. That means Wall Street is currently selling off. So my personal opinion is I am selling everything. I've got puts on the market just in case it absolutely gets wreck ball, because I have a feeling that it is. Literally, some of it to do with the fact that I got my cousin calling me up asking me what to buy. Okay, it's over. Game is over, right? All the exuberance and all that. I go with a sentiment analysis to tell me that we will continue down lower, but I know when is because of this right here. So pay attention to contract rollover futures. If you're not futures folks, I highly recommend that.
So, Vinny, I want to ask you, you know, how people could get in touch with you. You have amazing energy. Do you sell blood for a transfusion? And then my other question is, you want to address why your Twitter account was discontinued?
Yeah, that's actually a lot of fun. So we are undefeated currently. We have had some folks who come and think that they can beat AlgoBox. We have we've been basically challenged 3 major times where we absolutely destroyed the opponent. Last year it happened again. Are you guys familiar with a group named Macro Hedge?
Yeah. I think
Reversing.
so.
Macro Hedge, led by a guy named Adam Webb. These 2 names should be synonymous with scam. Scam alert. Be careful. Be careful. Macro Hedge, even though they are very, very dangerous. Be careful there. What we found in that contest was not only did we beat them, but we also caught them photoshopping their P&L. And then because they did not want to meet up to basically admitting that we had won the contest because they had a reputation and whatnot, they got absolutely obliterated. But what they wanted to do, they thought that they could intimidate me, which again, they probably just didn't know my personality. I'm just not the guy to, you probably can gather that I'm not just going to lay down, right? But they ended up, while my wife was pregnant, they went out there and doxed my family, not just my house, my parents' house, my sister's house, some of my rent houses. These people really came at me very, very hard. Now, that was absolutely disgusting. The contest, by the way, was not even close. We blew them out by $7,000. They were up 300.
So do
Short answer.
what
Let me
does
finish it up. Let me finish it up.
go ahead.
Let me finish
Go
it
ahead.
up. Okay.
Reversing.
The thing was, my wife is Hispanic, and they decided to make a bunch of racist comments and things about her, and they literally threatened my wife's life and my children's wife.
Oh, wow.
So to me, I was not accepting that as a good deal. And recently, they kind of brought back up, a year ago this had happened. It just happened to be like a year ago recently that had occurred. And so I had replied to a comment that was out there where one of these scammers was saying something, and I happened to have said something like, yeah, but look at the racist stuff that they said about my family. You're not going to believe what he said. What's interesting is all I did was put out and show what he said about my wife. And check this out. I got banned. Now, they think that's funny, right? And to me, look, Twitter's just Twitter, okay? Twitter's a thing, right? Doesn't really matter. Our main thing that we do, we're trading.
Reversing.
Twitter, it's sad that, I don't have a Twitter account now, and I won't be on Twitter again. But, Twitter's a little bit stressful to me. I don't know about you guys. If you watch things on Twitter, it's pretty negative. So maybe it's a good thing. I'm trying to follow and think about the positives on it. But that's why my account got banned recently.
Okay, so how do people get in touch with you then? Vinny?
Yeah, so YouTube, just YouTube, Algobox or Vinny Emini. And then the best way to get into our actual chat room where all of the fun stuff happens and all your learning and whatnot is inside of Discord. We're all about the gaming and whatnot. And the Discord links are in the YouTube videos on each one of those. So come hang out and check it out. Use 2-week free trial as well. So make sure.
How about turning around and showing your mug?
Oh, yeah. What, this one right here? This one right here?
Not that mug, yeah. Yeah, that one. Not your coffee mug.
Well, you can definitely see my mug on a few pictures out there on Twitter, which is now gone. But these people went after my family and whatnot, so I try to remain anonymous. We're in Texas, so we have guns and we protect ourselves. But
United States of Texas. Yeah.
Yes, but I have been trolled in ways that my life has been put in danger. So
wow,
we don't expose
I'm telling you,
that.
crazy out there.
I have 3 kids. Yeah, I got 3 kids.
Crazy out there.
Stuff like that. So
I
don't let the trolls have anything.
All right. Smart.
Thanks for the time, my friends. Happy Friday.
All right. Same to you, Vinny. You know what? I'll call you my trading warrior brother. How about that?
Oh, appreciate that.
And I hope you and your family remain untouched by what's going on out there.
Oh, thank you, sir.
And, I'm sorry you've had to go through some of the things you've gone through in this new era of the internet really being a cesspool at times. So
yeah, it's a little bit
hang in there, man. Keep the faith.
Appreciate the positive.
And I'm rooting for you. How about that?
Oh, appreciate it, guys.
All right. All right, Vinny.
I'll let you have to it. Thanks again, guys. Appreciate it.
Nice meeting you.
You too, guys. See ya.
I'll see you.